needed to for cash budget. So actual cash in December 2014, this would be opening business, opening cash balance, we would be needing that. Budgeted total assets, we don't need that. Budgeted total current assets, we don't need that. Budgeted liabilities, we don't need that. We don't need that. We don't need that. Collection of customers, we need that. Dividend payments, we need that. Issuance of stock, we need that because when cash are issued, this is inflow. When stocks are issued, we receive cash. Okay, net income is not included here. Payment of long-term debt, yes. Payment of operating expense, yes. Inventory item, yes. Purchase of plant and property with cash, yes. All right. Now let's see the solution here. So we start from 145 as a beginning balance. Collection from customers and issuance of stock will leave us 21,177,000. Okay, because question itself is in thousand. All right. And then budgeted cash payments, we need inventory payments, operating expenses, equipment, long-term, short-term, and then dividend. So total payments are here. So we have a surplus of 1198. And what is our requirement? We need have a balance of 135,000. So we need to deduct 135 because it's in thousand. So it means we are writing down here 135,000. So we have, do we need loan here? No, we still have 1,063,000 extra cash available for investments. We can loan it out to somebody else. We can do investments. We can purchase some assets. We can expand our business with this money. All right, everyone? Understand, everyone? Do you all follow?
Yes.
Yeah, I understand.
Any question? Venetia, Miria, Faik?
Mr. Jamal,
Yeah.
can you go back to the last slide? Because I don't really understand why we don't really include many of the other things like the budgeted.
Which one?
Like, for example, all the budgeted things like total assets, current assets, liabilities. So because they're not related to cash flow.
These are not backed by cash.
Mm.
Total assets, can we say that these are backed by cash?
No.
So we are making cash budget. Focus on cash. So we will write those things which is backed by cash. Either cash inflow or either cash outflow.
Mhm.
This remain in your business. This remain in your business. All right. It's not going out or coming into your business.
Mhm.
And we'll be carrying forward to 2016 as well. Go on and go on, go on. All right.
Mm.
These are
How
just-
about,
yes?
for example, what's the difference between like purchase of something with cash and then payments for inventory items?
Purchase with cash, which means you didn't take credit. If this is purchased on account, then we won't be including that in cash budget because this would be on credit. Cash is not. You there, guys?
Mhm.
So we will not include if this is credit or on account. All right. So the question specifically mentioned is cash. It means cash going out from the business. So we will be included as payment. If question is silent for, if the question mentioned that long-term, payment of long-term debt always be on cash. All right. Payment of inventory, if the question mentioned that it is on account or on credit, sorry, payment always going to be in cash. But if you say that purchase of inventory on account, then we won't include it in cash because we are making cash budget. Only those items that we pay or we receive cash will be included in cash budget. That is the beauty of cash budget. Understand?
Yes.
All right. If this would be written as purchase of equipment through credit, then we won't be including in. But payments means backed by cash. All right. So that's why the question specifically mentioned with cash. All right. Now our last learning objective is report cash on the balance sheet. We know that cash is to be reported as cash and cash equivalents. So we already know that what is cash. We just find out through bank reconciliation statement. We also budgeted the cash, find out the situation through cash budget as well. But what is cash equivalent? These are time deposits. Like we have extra cash we invested in our banks for some time, 6 months, 7 months, right? Certificate of deposits or high grade investment bond, a high grade government securities as well. All right. So you have extra cash you can deposit over there as well. So these are called cash and cash equivalents. Remember, these are highly liquid. You can convert it into cash in your local currency in no time. All right. Now, compensating balance agreement. So remember, when you open an account with the bank, because our accounts are very small, but companies' accounts are in millions. Okay, so bank can ask you a compensating balance. Okay, for example, you open an account that your account for $2 million. All right. Okay, but the bank will say that 30,000 would be a compensating balance. Compensating balance. What does it mean? It will be like collateral with the bank. If your account balance falls to 29,000 or 20,000, the bank will add 10,000, make it 30,000. But you must remember that one. This is your security. You cannot, make your account balance zero. Cannot do that, because even though it is your money, but you will not, if even if you have 30,000 balance and a check of 10,000 came, the bank will refuse it. Or if you have arrangement, the bank will give you borrowings and charge you interest on this payment. But bank will not charge this amount of 10,000 checks to 30,000 here, because 30,000 is collateral, is fixed. All right. So when this kind of arrangement is done, then the compensating balance is not included in the cash. In the balance sheet, on asset side, cash and cash equivalents. So you will report, if you deposited in the bank 22 million, you will report 1.97 million. Why? Because 30,000 is compensating balance. All right. And you will mention on a notes at the bottom of the balance sheet that 30,000 is the compensating balance. Why? Because we cannot use that. So it's purposeless, useless to report on the balance sheet. But you can mention in the notes. So are we clear? Everyone? Oliver, Venetia, Momo?
Yes, that's good. Thank you.
Your
Yes,
thoughts?
sir.
Tara and Meena? Subhan? Good, good. So,
Yes.
so remember, our midterm is on next week, which is on 9th of November. Remember? Okay. And please do not book any commitment. Those who are also watching online, please do not book your commitment on 9th of November during our class timings. So those who are also on self-study, prepare and make yourself available on 9th of November during class time. Okay. And paper pattern going to be, I would be uploading the paper in 2 parts. So those who already have, with me the other courses, they know how I make the midterm. Part 1 is going to be MCQs and true false. I would be uploading this answer sheet. answer sheet. And I will be giving you time which is restricted. All right. So this is going to be a major portion here. And also, since we are having accounting, so I would be asking you, to make cash budget, to make bank reconciliation, and to go for entries, right? So chapter is going to be included. Up till now, we have completed 4 chapters. So all the material already sent to you. All right. So please do go through that, and also do the end question, chapters and questions as well. And I also uploaded the practice questions of, chapter 1, chapter 2, chapter 3, and chapter 4 as well. All right. Any more questions regarding our exam? If no, then remember we have our assignment 4, and assignment 4 deadline is 8th of November, a day before the final exam, so that you can compare the answers of this assignment 4, because assignment 4 is the preparation of chapter 4, so that you can compare your answer whether you did correct, you submit your answers correctly or not. Okay, remember your submission of assignment 4 is on 8th of November, which is on Tuesday. Okay, not Wednesday. And all other things are the same. You need to upload in Word file, rename your file according to your assignment number, your student ID, and your name as well. All right. So I would be uploading this PPT as well, and also I would be uploading the assignment 4 on both platforms, WeChat and the Blackboard as well. All right.
Okay, sir. Thank you. See you.
Your exam.
Right, sir.
See you.
Thank you, sir.
Thank you,
Bye-bye.
sir.
Yes, sir. Bye-bye.
Thank you.